Thank you so much for joining us here on the Market Day Report. I'm Marlin Bohling with you on a Monday. Happy Columbus Day to you. Well, that means government offices, at least a lot of them, and a lot of financial institutions are closed for the day, but the markets are trading today. And I want to go ahead and take a look at our corn market and bring in some guest commentary here as well. Let's take a look at that corn board right now, see what is going on. So on the corn market, we have that nearby December contract now down 1 3/4 at 348 1/4, and we have the March contract down 1 3/4 at 361 1/2. And the soybean trade, we had a little weaker tone there now. November down 1/2 at 971 3/4. If I remember right, when we opened, it was like a tick or two higher. January soybeans down 1/2 cent at 982 1/2, so it couldn't be much more uneventful in the corn and soybeans. Now, if you look at the wheat trade, we started out with weakness about 3 cents lower. Now we're down 4 1/4 on December Chicago wheat at 439 1/4. On the Kansas City wheat, we have December now down 4 1/4 at 432 1/2 per bushel. Meanwhile, Minneapolis wheat has December currently trading at 620 even per bushel. That would be down 3 3/4 cents. On the cotton market, let's throw in that December contract there. We're down 34 points at 68.50 per pound. So with that being said, I want to bring in our in-studio guest, Mr. Chris Swift. How you doing?
Good morning, Marlin. Doing great.
Good to have you back with us again.
Thank you, sir.
Of course, Chris is with Swift Trading Incorporated in Nashville. So, all right, your thoughts here on this grain market activity we're seeing here. It's so quiet right now. Wheat sliding a little bit today. What is behind this market activity here?
Absolutely nothing, because there is nothing going on. The rains that came up through the central portions of Indiana and Ohio yesterday from the hurricane, they all kind of drifted a little bit further east, and that slowed a lot of our harvest down, but other than that, there's just not a great deal going on. Our exports are running at a relatively clip pace, and not anything to slow us down there, but yet we just sitting right in limbo right now in the middle of harvest.
All right, so we have the wheat trade in Chicago, Kansas City, Minneapolis. They're all under a little bit of pressure here today. They're trying to sow right now. A lot of the areas they can't get the wheat in the ground, like in the southern plains. Although, with all the rain, that means pretty good soil moisture for the seedlings when they do get in the ground.
That's right. Central Texas and South Texas has been great for moisture. They've got a great wheat crop coming up, and they're looking for young yearlings to come in and to graze off that. Other than that, yeah, it's going to make for a little bit of a delay, but I don't think too awful much. Everybody always likes moisture, regardless of when it comes. We
had heard of some crop problems on the wheat crop in Australia, maybe eastern Australia, but last I heard they had gotten a little rain.
They had.
Kind of alleviated that concern, I understand, and there were some problems, I believe, in Argentina, too. Too much rain in some areas. But now I don't hear a whole lot about that. How did that turn out?
You know, I haven't kept up with it too awful much, but I know that world wheat supplies remain elevated, and until we can start to chew through some of those and we get some type of delay in planting to a severity, or we get some kind of reduction in acres, that wheat's probably, unfortunately, going to stay down here for a while.
So we have a little bit of a weaker corn market right now. We have USDA reports coming up on Thursday. So with the weakness in the corn market, we'll get to it in just a second, but is that going to play a role in the feeder cattle market or not today?
It will to some extent, not a great deal. Corn prices right now are sitting right at intrinsic value, about between $3.40 and $3.50 a bushel seems to be the intrinsic value, as low as they can get with the demand that they have from ethanol and livestock production. So I don't think you're going to see a great big rise in the corn market, so therefore I don't think it'll have much of an impact on the feeders right now.
Well, I'll tell you what, we'll find out how much impact, if any, it has here in just a minute.
Right,
we're talking with Chris Swift of Swift Trading Incorporated in Nashville, Tennessee. We'll be back with Chris right after this. And we're joined right now by Chris Swift of Swift Trading Incorporated in Nashville, Tennessee. And of course, I want to remind everybody that there's always a risk of loss in futures trading or options trading. So I just want to give everybody a heads up about that, just like always. But in the meantime, I do want to get some good information from you related to what's going on in the livestock trade. We had very quiet activity in the cash cattle market last week. Right at the very end, then there was a little bit of trade that shook loose. And we're hearing anything from like 108 to 110, I believe,
That is correct.
at the end of the week last week. And it kind of took the spurs to the futures trade today, didn't it, this morning?
It has. We started setting new contract highs in some of the back months for fat cattle and some of the back end for feeder cattle. Always telling you that there is still demand for that market in the back end there. We are into the wall of cattle supposedly for this week, and so for this time of the year, and with that now being depleted at a rapid pace, I think we're going to continue to move higher as long as our demand stays strong.
Well, let's take a look at our prices here, Chris. We have October live cattle gaining 58 cents right now. We are trading at 111.60, just 2 ticks from our high of the day. December now 53 higher at 117.45, and February up 66. That would be our biggest gainer so far right now, and that would be the February contract priced at 121.38. Per hundredweight, and that's a dime off of its high of the day. Let's switch over to the feeders. And on the feeders that we were just talking about as we headed into the break, we have October feeders 15 higher now at 154.10. It's 30 cents off of its high of the day so far. November up 37 at 156.12. January 55 higher at 154.25 per hundredweight. So all of these prices seem to be at least in the upper third of their trading range here so far this morning. Is that encouraging to you for
It is.
Prices?
Yes, it is, absolutely. Anytime we can come out on Monday morning and start off higher, then that tells you that the packer is hungry for inventory. So I think that's what we're going to see this week. We didn't get a whole lot of cattle traded last week. They have been trying to pull off of their October forward contracts, and although they have done a good job of that, we know that the hard pull continues to leave them without the total numbers that they need for slaughter. So they'll be back in the market. We're just not sure at what price yet.
Now, you were telling me during the break that we have new contract highs going on this morning?
That is correct. In some of the back months, we've got new contract highs. January set a new contract high in the feeder cattle, and I believe June and April set new contract highs.
So what does that mean?
Well, that means that there's not a short position out there with a profit.
Okay.
At new contract highs, those are new highs for the year.
That's one way to look at it. All right, I want to look at the lean hogs here and see how they're trading in the early going today. So far now, everything's higher. October up 34 at 59.52. December 16 higher at 61.08. February 30 higher. So, Chris, do you hold out hope that this can stage a rally in the lean hog market, or is it still kind of in a sideways pattern?
Well, it's still in a sideways pattern, but clearly the demand, if you ever want to see how strong demand was, it's in the hog market. Fourth quarter production, all-time record high. First quarter production supposed to be equal to, and yet now we've hit a bottom and started back up, with even some of the back months, the summer months in hogs, setting new contract highs again. So even with the declines in the front end, now we're starting to see that, the declines in the front end, we're starting to see the back end lift up a little bit, and a little bit of demand here on the front end on the cutout has begun to lift prices off the lows.
Well, thanks again for stopping in. Always good to visit with you.
Thank you, Marlin. I appreciate it.
Thanks for all the help. Chris Swift of Swift Trading Incorporated in Nashville. Christina, back to you.
Thank you, Marlin. Thank you, Chris.